Well, it looks like we're at the top of the hour, Richard.
Yes, we are.
We are, and I'd like to thank everyone who has joined us today. Let me get over out of here. Richard, I was thinking this morning how we've come here on this very platform and we've discussed topics like families pooling their monies together to purchase their first investment properties, becoming investors. We've talked about the different loan products and the down payment assistance programs that are associated with each. And then we even talked about the pros and cons of using the programs. And so here we are today talking about non-QM loans. And I know everyone wants to know what does that mean? Richard, what is a non-QM loan? And before you answer that, let me introduce myself. My name is Antoinette Sullivan. I'm a realtor with Proxima Realty Group out of Oakland. And I am so happy to be here again with my friend Richard Theory of Nexa Mortgage. And today's conversation is about non-QM loans. So if you hear something that sparks your interest, or if you have a question, please feel free to raise your hand or drop your question in the chat, because this is a conversation that its purpose is to empower you with knowledge to move forward with real estate as a wealth building tool for you and your family and your legacy. So again, thank you, Richard.
Absolutely. Thank you again for having me. I've been so much enjoying these and such positive feedback. Um, there's a story I share with my church congregation about a Black History Month moment, and where the young men walk into the bookshop and they're super excited, and they see the owner of the shop, and they're screaming Black Power, Black Power. And his response to them is, that's true, but even more so, knowledge is power. And
Absolutely.
along those lines, that's how you and I are getting to this. And I think it's been a great natural progression. As you're right, the first time home buyer aspect is there, and it's certainly available. The first time home buyer limit in Contra Costa and Alameda County is almost $300,000, you see. And so those are endless. But even more so, Antoinette, what you and I have been trying to accomplish is actually building wealth. And building wealth through real estate has a lot of other benefits to it. Certainly, almost to a point of arrogance, I am so proud of being a homeowner, right?
Hmm.
I know the variables that come into being renting, when people, the uncertainty of renting and whatnot. And so today, as you mentioned, we're taking it even a step higher, not just from home ownership, but possibly being an investor. And it's very interesting as I circle back to the concept of the first time home buyers. You and I both know, Antoinette, we are very often approached with that as the ideal of the first time home buyer. I
Yeah.
want to do what? We hear it all the time, Antoinette. I'm going to buy a house, so what? Then I'm going to rent it out.
Yeah.
And so that's great, because you know what? That's a really realistic concept, and a great perception. But in the words of Smokey on Friday, sometimes you got to crawl before you can walk, right?
That's right.
So we understand that. And so the DSCR loan. Let me see if I can find my little flyer real quick. It has some bullet points here I wanted to share. The DSCR loan stands for Debt Service Coverage Ratio. This is a product that allows a person to buy a home, right? And they buy this home with the understanding that the only thing they need to qualify is not their W 2, is not their pay stub, is not their tax return, but instead they qualify by having the rent that is being paid meet or exceed the amount of the mortgage payment. If you buy this home, no matter what the cost, you need to have a down payment that brings that mortgage payment at least or less than the rent you will charge. These are very flexible programs. And you can see by the credit score requirement, they're not really some outrageous loan that's just made for people who are A1 people. This is an opportunity for you to invest in property simply by putting down the significant 20% or more down payment. And long as the credit score is adequate, you can in fact become a renter from the first time out. Okay. And as you can see in the bullet points, first time investors are allowed. Now, the reason that bullet point is there is in the past, there was the criteria to meet was that you would have to had some experience in being a landlord. They didn't want you to just jumping off of any other situation and becoming a landlord without any prior experience. Well, they've gotten away from that, and so these type of programs are out there. And then I had another one I wanted to share with you as well. Excuse me here. I think I can. I better not try that. I don't think that'll work. I want to stop that share, Antoinette. Bear with me. I want to share you one other screen. That one was, again, the debt service coverage ratio product. I have another product that is called the bank statement loan. So what is this program going to do? This program's leverage is from the fact that many of my owners of businesses, they are doing something called a Schedule C. I know I'm not an accountant. I'm not trying to give you any tax advice just because we're into 2025, but a very common behavior of the person that owns their own business is to do what? They take their business, and typically all of their expenses go under the headlines of the business. Therefore, the income that they're showing is all being directed to their payments. Typically, the business owner will have their car in their business name. They will say that even the home is being used for business purposes. Certainly, all the goods and materials that they're providing for their business is a business cost. So what does that do? That takes their taxable income down very low, and they don't have to pay a lot of taxes, right? Well, that's not going to fly with Richard the lender. You got to show me the money. So what do? Instead, we look at the amount of money that goes through their hands every month. Guess what we do? We treat them like a big boy. Okay, you're wearing a belt now? Good for you. Great. All right, you're able to tie your own shoe? That's wonderful. You're also able to manage your own money. And here's the bullet point on this. A guy who has $70,000, $30,000 going through his business every month, and his credit score is okay, we will say to ourselves, the lending institutions will say to ourselves, this man has more than 100% of the mortgage payment going through his hands. And his credit score is good enough that we will trust that he knows how to manage his money enough to the point where he can pay for this loan, even though this mortgage payment, even though his tax returns do not say so. Well, actually, I misspoke, because we would never even get to the point of looking at his tax returns. We would simply look at those deposits. I had a gentleman that I did this transaction with. He was showing $70,000 a year of income. Well, everybody, that's less than $6,000 a month. If I divide that by 2, which is a 50% down payment, debt to income ratio, he would only qualify for $33,000 a month mortgage. That's not very much, you guys, at a 7% interest rate. However, when I looked at his bank statements, he showed that he had, going through just his debit and merchant services machine, where you pay with the card, he was having over $40,000 a month going through that machine. Ladies and gentlemen, he owns the $700,000 house based on the bank statement program. We simply take the 12 months, we do an average of what the income or amount of money that's going through there, not the withdrawals, no, just the amount of money that's going through there, and we pre-qualify the gentleman based on that criteria. So those are just a couple of the things, Antoinette, I wanted to use based on what you and I were talking about coming up to today's event. What kind of questions did you have regarding something like that?
Well, I just wanted to talk about some of the special features that might be associated with this loan. So does this loan allow for interest-only payments or balloon payments?
Yes, they have structures in that capacity as well. Let me also, too, you had something at the beginning. You said that's non-QM,
Yeah.
non-qualified mortgage. These are products that don't have PMI. That's something that you and I know called private mortgage insurance. So even when there are situations with these non-QM loans where we're putting down less than 20%, in the conventional world, if you put down less than 10% on a conventional loan, you will have PMI, private mortgage insurance. What is private mortgage insurance? Private mortgage insurance, my best example of it is that you paying someone else's car insurance. The only time that would benefit you is if the person ran into you. And seeing how maybe you live very far apart, it's not very likely. Private mortgage insurance is insurance that you pay that the bank has on you. So if Richard does up and walk away and no longer pays his loan, the bank's not really concerned because guess what? It was insured, and Richard paid the insurance every month. So the non-qualified aspect of this too, Antoinette, comes into play. I didn't want to forget that thought. But certainly, those do offer all those. They even offer adjustable rate loans in that capacity, which aren't as popular now as they used to be.
And so most self-employed or entrepreneur individuals would benefit most from these types of loans.
Absolutely.
Yeah, I'm glad
So,
that there's a product like that out there. I didn't mean to cut you off, but
yeah.
I didn't realize that there was a product like that until you and I began having these conversations. So thank you, because you know, just working with you has helped me grow as a realtor and advising my clients. So I believe that, you know, my company, when I say the company that I keep, most of my friends are entrepreneurs and business owners, you know, and so sometimes we kind of go back and forth with, you know, approaching the lender and, you know, I'm not ready is usually what I hear because I haven't filed my taxes or I don't have enough in the bank or there's always something tied to that financial aspect. So with that, I understand that in order to qualify for this loan, that you must be able to show that you have adequate income to cover, you know, to pay the mortgage and other living expenses. I imagine, I don't know how much you guys, how you weigh other living expenses. I understand that. And I understand that the future rents are also factored in as income, future income. And I think that's awesome. So is there any other special feature about this loan that would appeal to a self-employed person?
No, I think really the biggest hurdle you mentioned when you spoke with your sphere of influence and whatnot, the biggest rejection we got was the lack of preparation. Whereas what I'm looking at in this scenario is history. So it's impossible for you not to be prepared because I'm looking at the last 12 months. This has been done already. So I'm not looking at
Mhm.
the future where you need to be prepared for this. I'm looking at your history, and that's really the only qualifying thing. And so you spoke about the rents. Well, it's a lease. It's a lease agreement. Okay. And frankly, we're not digging real far into it. We're looking typically for a 1 year lease agreement to say that that rent payment will suffice as far as covering the mortgage payment, and we're satisfied. See, here's the difference. We are really trusting, and again, my joking comment, given calling them the big boy perception, and they can wear a belt and all that. Those jokes I were thrown out. That's really the benefit of this loan, in a sense that a person wants to be treated like they are successful business people and that they know how to manage money. So guess what we've done? We've created a product for exactly for that person. Okay, this came up with a almost in an argument capacity with someone the other day. They were telling me that they wanted to buy something through their business,
Mhm.
and then they actually said, well, how are these rich people doing this? And I was paused for a long time. Like, this is the part where it kind of became an argument because this isn't just a rich person thing. This is a responsible person thing. And that's really where we need to be, back to the knowledge is power concept. We need to make sure that, our credit is in order. That is the first and most foremost thing we had. I looked at someone the other day, they had no credit score. They said, yeah, well, I don't mess around like that. I said, well, guess what? The rest of the country does. That's all we do. We play the credit game. And so you didn't see any of those products that I spoke about today. They all did have a FICO score requirement. And believe it or not, you guys, I know we're not talking about first time buyers this week, but it comes up a lot in that you have not prepared to do this. And I text that person a First Progress secured card application. I'm in no way affiliated with that company. However, you can mail that company $500. They will mail you your card with your own $500 on it, and you will begin to establish credit. Usually, you start very high. You start at 7 something, and it's only with the collections and whatnot do we end up at the lower numbers. So I know I kind of got off the point though, but I feel like it's all relative in the preparation stage of getting to utilize these products that we're talking about today.
You know, and some of the feedback that I've gotten from our past conversations is it's created room around the thought process of minding your financials in order to purchase the real estate that you can buy to create wealth for yourself, provide comfort, get out from under the landlord. And so minding your finances is such an important part of purchasing real estate. So it's good that this comes up in all of our conversations
Good.
because a lot of preparation, because if you have no plan, you what, plan to fail? Sometimes I get these quotes all mixed up, but I think
Right.
you all know what I mean. So we've been talking quite a bit. So I was just wondering if anyone who's on right now has any questions of myself or Richard. And I'll just give you a few seconds to either raise your hand or type your question in the chat. We welcome all of your questions.
Mr. Brackett?
Yes. My question is this here. So, say, for instance, you want to start working on saving for a home. Should you use a checking account or a savings account? And should you pay everything through a debit or your credit card, like far as your bills per se, to like, let your credit score go up or whatever? Because I've always hear, oh, pay your bills on time. Make sure your credit card is paid like maybe a week before or whatever. A lot of different scenarios I get from different people about the
Right.
whole credit thing.
I love it. Great
These are
question.
all good. Yeah, those were great questions.
A great question. The money, oh my goodness. Now you got to hear a story. My daughter was my assistant. She walked into my office and she was panicking. We were about to lose a deal. I said, "Why are we losing the deal?" And she said, "Because the buyers don't have enough money." And I told her, "Get out of my office." When it's your daughter, it's your assistant, you can speak like that. She really did. I really kicked her out. I was busy. She came back later and she goes, "What was that about? Why did you think that was nothing?" You know why, Mr. Brackett? Because money is always available. You mentioned, should it be in your checking or savings account? Brackett, I don't care if you don't have any money because there's money in the world. There's money in California. There's money in the United States. Gift those non-QM products that we're talking about, Antoinette, those 20% down payments that I'm requiring for those products, that does not have to come from the buyer. We do not even source the gift. That's why they're called non-QM loans, non-qualified mortgages loans. All right, back to you, Brackett, and your question. You can put the money in your checking or in your savings. Here's the key. There has to be some type of paper trail, Brother Brackett. Money can't just fall out of the air into Mr. Brackett Wallach's account. So if you said that that was your friend or cousin or someone who was going to finance it, that's fine. Let's just make sure that that money derived from a legal location. That's the only thing that you need to worry about. You don't even have to have your own money. The second thing was the credit and debit thing. Absolutely, you want to keep your credit scores good. And absolutely, the elephant in the room perception is don't let your $5,000 card be at a $5,000 balance. That's not going to work. That's a trick. This is why a credit card can charge you 29.9% because you have not kept your end of the bargain. What do you mean, Richard? What I mean is a credit card was meant for this. Today is Monday and I get paid Friday. I would like to buy that item on Monday and then pay for it on Friday. That's what the invention of the credit card was for. But since you kept that balance be on Friday, the powers that be says go ahead and charge him 30% interest because really he should have paid. This shouldn't even come into play because it should be at zero already. So those are my answers for you, sir. Just make sure, if you have the money, you can put it in checking or savings. Just make sure that we can see when and how the money got deposited in from a legal source. And just keep in mind, if you don't have the money, we just need to know where it came from. Does that answer your question, sir?
Yes, sir. Thank you so much. I really
Hey, great
appreciate
question.
you
Well,
guys.
see, go ahead. You were saying?
I was just saying thank you so much for explaining that because I never really knew how to use credit, So as you and I were talking, to the side, I was
Mm-hmm.
saying, how my scores is in the low 500s. I think I like 619, maybe Experian, but everyone else is down in the 540, 580, whatever. And so I was really just wondering, like you were telling Antoinette, like you were saying, that $500 card and
Absolutely.
and you keep it for like a year or so and make sure you pay it on time or before time really help your credit score. So that's the position I'm in right now. I'm
I love it.
trying to work on getting my credit stable and up to par, you know.
And I don't mind saying publicly, since you brought it up, that you and I are working on that. All right.
Right. True.
It's a
That's
long,
true.
right. You and I have had a private conversation, and what I've offered it to him, Sister Antoinette, is a program that offers for sale a person to become a signer, authorized signer on an account. You can purchase these things legally. And what it does is it said this gentleman is now an authorized signer on a card that has a $5,000 limit with a $200 balance. It's something completely legal. There's a company that does it, and these are one of the loopholes that we are taking advantage of by what, Antoinette? By knowing the knowledge that these things exist.
Wow, that's incredible. So let me just say this so I'm clear. So you're saying, say I've got a $5,000 credit card and my daughter needed help with to boost her credit score or her credit worthiness, if you will.
Right.
I can make her an unauthorized signer on my credit card, and that would benefit her in this process.
Yes is your answer. And I'm going to tell you something. There is a demographic, wink, wink, out there that does this when the children are born. I had a person come into the Bank of America on Oak Street when I worked there, and the woman was 20 years old. And I asked her, "How is it that you have a account that's 23 years old?" Well, the
Wow.
account had been open. The account had been open, right, Bracket. The account had been open 3 years, and then when I was born, they added me to it.
Wow.
And so
That's
guess what?
amazing.
She's got a 20-year-old account, you guys, that's never been late, and it's like again the demographic. Y'all read between the lines. This account, this credit limit was like $50,000 with a zero balance, you guys. And so
Wow.
yeah, this was one of the highest credit scores I've ever seen, and I've been in the business 25 years. And here it is. This person is 20 years old. So yes, absolutely. We want to put them on as authorized signers, and we have them on this. Now these are again for sale things. So this is just an avenue for a quick fix. As I had shared with Mr. Brackett when we were speaking on this, these things occur as soon as the reporting date is. Like if I open an account today and you open one next week, your reporting date is different than mine, right? Because you have to
Right,
go 30 days. So
right.
you can buy them, Antoinette, based on how soon you want it to show. See, if I wanted to show immediately, today's the 16th, maybe I get one that reports on the 20th. And I think all you need to do this is 5 days lag time for it to occur immediately. I know we're completely off of the topic, but it's all knowledge. And again,
Oh,
knowledge is power.
yeah. Yeah, we're having a conversation, and sometimes conversations go where naturally we're going with the flow here, and I hope everyone on here gets a chance to learn something new or even have some of their concerns addressed. Richard, I have one question, if it'll help us get back on track.
No
Um,
problem.
can land be purchased with this in this method, non-QM loan?
Yes, it can.
Okay, are there any caps on the limits?
It's all about money. I mentioned at least a 20% down payment on those. I actually had a land flyer ready for us, actually, and for whatever reason, I had closed it, and I was going to try to reopen it right quick for you. But 65%, so 35% minimum down on the land. And if you really want to start getting heavy, we have what we call a one-time close program, Antoinette, which says we will sell you the land knowing your intention is to build a property on it, and we will give you the one loan immediately. Okay, and so we will give you a one-time close loan, gives enough money to make the land yours, puts it in your name, and then we want to see your blueprint. Let's see the blueprint of how this house will be constructed. If we sign off on it, we will then give you the loan. It'll be a bulk amount, but we issue out the money one section at a time. Oh, the foundation guy has laid the foundation. We come out and inspect it. We wire the foundation guy his money. Who's next? Is it the carpenter? Okay, maybe the so on and so on. The plumber. Okay, we come in, we see the plumber's out. The plumbing is in there. It's acceptable. So certainly, no, there are these are the investor type products that you and I had been talking about before, and they all have a product just ready and waiting for anybody who is trying to make a move in that direction. So absolutely.
This is exciting information. I didn't know that, Richard. And again, I'm having several aha moments over here. Thank you for
Oh,
that.
absolutely.
So another question I had, could I 5 or 10 years later down the line say, I want to finance? Could I refinance into a conventional from the non-QM, or am I restricted to have to stay that path?
For the most part, they are done in a temporary capacity. So absolutely. And Richard, as a 25-year veteran in lending, would do the proverbial shoot himself in the foot if I cornered you into a product. You see, and so here's the terminology you want to be sure does not exist in your loan. No prepayment penalty. A prepayment penalty can occur even within a loan. A prepayment penalty means that you've paid more on the principal than you should within a 6-month period. I never offer a product that has a prepayment penalty, Antoinette. It just doesn't make sense for me because I want to be your lender for life. So yes, the whole concept of these products do typical. Here's the elephant in the room. These products on a non-QM, they will have the higher interest rates. Okay. The average rate, I wrote it down this morning for a meeting. The average interest rate that Freddie Mac reported for the week for a mortgage loan is 7.04%. I guarantee you these non-QM products are going to be about 7.75. Okay. So it is what it is, because if you want me to look the other way and tell you don't hold up that tax return in front of me, if you really want that benefit, then there needs to be a benefit for the buyer, for the lender as well, to take on that risk. Let me real quick here. This is a real quick slide of
Okay.
the vacant land criteria, just so you have it on the recording if we want to look at it later. As you can see, the vacant. As you can see, there's our famous acronym over here, non-QM also. So again, you don't have any of the little nitpicking little fees and whatnot. The bank is going to give you this loan as long as you have that 30% down. You'll also, there's no prepayment penalty bullet, Antoinette. And also, you notice that loan term, you guys. You see, that's not a conventional loan term. A conventional loan term is how many, everybody? 30 years, you see? And so
Hmm.
why is that relevant? That's relevant because now, since I need my money back so much sooner, you're going to have a higher payment. And so this is, again, the big boy room. This is high. But why are these products so important? The longevity of them. Why is a person buying vacant land? Uncle Sonny, I think my sister's on here. Uncle Sonny built a nice big house in Santa Rosa. He built this house adjacent, Antoinette, to a airport runway. The airport runway on the other side of the road was lined up perfectly with the driveway to his house. And Unc was smart. Unc said, bought this house so that if that airport needs to expand, they'll have to buy me out. And that's the same concept a lot of time with vacant land. You know
Yeah.
what I'm saying? It's not so much the land itself and what it has going on. Where is it? The
Yep.
location of the land, and
Hmm.
what is its potential?
Right.
Had you bought land out here around the corner from where we are out here, Antoinette and Antioch and Brentwood,
Yep.
just like a Target and all this stuff that wasn't even here when we moved out here.
Yep.
It's
Hmm.
incredible.
Yeah.
All right,
I always pray for the day I can be in a position to be lucky enough to snatch up some land somewhere and hang on to it until some developer comes along ready to pay top dollar for it. So yeah.
You and I have joked. We had a lot of fun. Everybody on here, I think that knows me knows I'm on the cover of the magazine, right? So
Yeah.
I've handed out the magazine, and the biggest responses that I've gotten from it has not been the first time home buyer markets as much as it's been the investor markets. And
Right.
I love that everybody's thinking, big out here about, what direction are we going? We got a new president being sworn in, right? We
Oh
got
yeah.
different things happening. You've got Bitcoin going on. You've got the unemployment rate. You got people now hardly ever working from home. I think my niece's husband, if not my niece, is on here. Her new job has her at a job now that all of a sudden she can work remotely 100% of the time. So we have to be along on the trend. Are we prepared? And so the fact that you said let's speak on non-QM products today is genius. We were speaking about organizations earlier, and I said some organizations aren't keeping up with the time. You see,
Mhm.
some people are sitting here, even myself, I was worried about rewriting something. I had a project to rewrite something months ago, and my daughter says, "Why are you rewriting it yourself when the AI can rewrite it for you?" Well, this old man had, he put down the pencil, and stuff. So that's where we're going, though, and I think the non-QM is definitely a vehicle that can get us to this new thinking.
Well, that's great. Yeah, I always think of myself as someone who's got her finger on the pulse. And so yeah, and I'm glad you were ready to speak on that, on this topic. And so while we're talking about properties, it can I purchase a building with more than 4 units?
Oh,
Is
absolutely.
there, okay, because after 4 units, it gets into commercial. So I was wondering, does the non-QM loan products roll over onto the commercial side?
They do, but as you mentioned yourself, using the right terminology, we have gone from consumer products now to commercial products, which is exactly why your good friend Richard has moved to the broker side. In that I am able to, as you can see, almost every time you bring up a topic, bam, I got a flyer for it, right? You see
Yeah,
where I'm
you
going with
do.
it? And so, yeah, no, absolutely. Lending is my life, and again, we start to get to the commercial. Again, it's the big boy room. We are not looking at so much the individual, much as their activities again. Okay, so you're right. You said, okay, now I'm into a commercial sized building. Well, have you done this before, sir? And what is your standing right now? What is your credit worthiness? Have you financed one before? And so those are the type of things that come into play. But then once all that's been satisfied sufficiently, then we're ready to offer any type of product a person wants. I mean, you can even go to the far extreme of hard money loan. What is a hard money loan? A hard money loan is not non-QM. It's not any of that. That's a loan that says you pay me back in 11 months. And guess what? Your interest rate is 12%. Sorry, it's one thing short of being loaned to by Tony Soprano himself, a mafia type loan. The only thing is we don't have anybody tied up in the basement.
Okay, I'm glad.
We got a product for everything.
Well, we've been talking about 30 minutes now, and I would just want to do a check in the room to see if anyone
Please.
has any questions. If you do, please raise your hand or start speaking or type your question in the chat. And while they're doing that, Richard, I just wondered, can these loans be refinanced?
Absolutely. No doubt. Yes, I am available to do that. And sometimes, believe it or not, Antoinette, we will refinance you again to a non QM. And
Okay.
this is the wonderful part about the relationship. And as I mentioned before, I wouldn't give them a prepayment penalty because I want to do business with them down the road. And I found in my experience that uh, someone with a prepayment penalty very rarely goes back to that person, right? And so a lot of times, though, the non-QM is an evolving product. And so just because I know where our heads are going is we're saying we're doing this non-QM, a little different loan, a little higher interest rate, a little different criteria just because we want to get in. But as we evolve, you might find that a non-QM product is still the answer even down the road, that the conventional loan itself you may still not be showing any income. You may still now be a building owner of a commercial building, which is a whole set of situations than we look at as a consumer. And so, yes, but we couldn't refinance you into a consumer product or into a commercial product, but certainly QM may not be off the table even for the refinance.
Well, Richard, I don't see any questions in the chat, and I want to thank you for that. And the reason why we have these conversations for everyone on is to empower you. Like Richard said, knowledge is power, and we want you to know about this, what you're getting into, because purchasing real estate, becoming an investor, those are big deals, and we want you to do it with full knowledge. We want you to do it with full knowledge and understanding of the responsibilities that come along with home ownership, investor ownership, or land ownership. And together, Richard and I make a really great team. I've worked in this industry for over 10 years, and I must say, of all the lender partners that I've had, and I don't call them all partners, I just want to say Richard is the most knowledgeable lender that I've worked with. And
Oh,
he's always such a pleasure. And you all know that if you know Richard personally, he's smart and he's always pivoting with the times. And so that's all I have to say on that. And I do hope that you guys have some questions, but it doesn't look like you do. But so I'm just going to say thank you for joining. And I do hope that next time we have our get together for a conversation, you can join us. Richard and I come together on this very platform at least twice a month. We wanted to do it once a week, but hey, you know, twice a month is, I think, all that you guys can stand of us. So again, thank
Believe it.
you.
Take it down to two,
Thank
right?
you. Thank you. And if any of you want to receive a copy of this, just leave your email address in the chat and I'll be happy to send that over to you. If you want to speak with me offline, I'm going to go ahead and leave my email address in the chat for you. Richard, what do you have to say?
I live in Brentwood, and in 2023, in December, there were 41 sales. In 2024, there were 57 sales. Okay. Ladies and gentlemen, the housing market is not going anywhere. Today, someone decided, after pondering a long time, to use some of their 401k money to buy a home. They were really perplexed about that. And I said, why are you perplexed about that? Did your retirement not include you owning a home? You just, come on, this is all, it's all relative. Home ownership, it really just gives an essence to life. The fact of where will we go and how will we do it, and the fact that you are able to host it, I'm just telling you, it's unbelievable. A woman spoke with me the other day, and she had a question about her supplemental taxes because she had just bought a home, and so she was calling me to get an explanation. And I asked her, how's the house? She goes, Richard, I wake up in the morning, I stare at the ceiling, I can't believe I'm a homeowner. And that just warmed my heart,
It's
because
beautiful.
we talked a lot, Antoinette, and you and I have done this with our closings. We talk a lot about the financial aspect of it and the grind to get the down payment, and none of that came up. None of that came up. It was just the fact that she was a homeowner now, and it was her own place, and that was just incredible. So anyway, that's all I have to say. I just wanted to thank you. This is just the highlight of my month. And like you said, we couldn't do it once a week, but certainly, Antoinette, we were considering every 2 weeks. I didn't know, I don't want to put you on the spot, but I'd like to maybe at least mention that would be January the 30th. If we were to go 2 weeks from today, do you think we'd be okay with that date?
We would be okay with that date.
Very good. So let's everyone please make a note of that, and we'll get our usual invitations out on January the 30th at 2 p.m. on this same back channel, as they used to say, and we'll be looking forward to come to you with a very entertaining topic as usual. I wanted to send a shout out to Miss Tia over there too. I really appreciate the opportunities that she's giving me, and being a part of anything that she's connected to. I know we'll be doing okay. So thank you, Sister Tia, for taking on my good friend here.
Well, thank you all for joining. And if there's nothing else, I wish you all a great day. I'm going to stop recording and let you all get on your way. Thank you.
All right. Thank you, Antoinette.
Bye.